Let's bring in senior economist at Financial Derivatives, Okoyemi Ogutade, is live to us here in the studio. Good morning. Okay.
Good morning.
Thank you very much for coming through. We appreciate this. How are things shaping up out there? It looks like politics will always impact everything we do on planet Earth.
Yeah, it's a same so. I mean, the Russian and Turkey incident is particularly important for the agri-commodities. What we know is that Russia and Turkey, they have bilateral trade agreements specifically for wheat and corn, and we know that Turkey is like the 7th largest importer of wheat in the world, and Russia as well is also part of the top 5 exporters. And we've seen that the Russian government has come out to say they're going to impose some trade sanctions on Turkey for what happened over last week. And we know that Turkey has also come out to apologize for this incident. But how far is this going to go? That's what we're unaware of. But traders within the market are anticipating that this would affect the market for wheat and corn.
Turkey, Russia ain't let this go down without taking a pound of flesh from Turkey, whether we like it or not. Yeah. When you ban those items, you're seeing prices going up. So where are we at the moment in terms of how this is farming out? Show us some data here, trying to look at the price of corn, wheat and rough rice, corn and wheat down, but of course other agri-commodities are on the uptrend. If grain futures are trading lower on this, what does it mean?
Well, the reason why grain futures are trading low is because we have an oversupply in the market. If you also take into account the fact that Argentina's president has come out to say that they are going to push out more wheat, because initially Argentina had a wheat export tax from 2006 right up to now. So the new president has come out to say, okay, you know, we're removing this tax and we're going to push out more wheat there. So that's what's driving the market as well. That's why we can see that prices are going down. But if you look at the week-on-week decline, it's more of like a marginal change, because you're looking at Turkey and Russia, and then you're looking at Argentina as well. So this is what's driving the prices in the market right now.
Well, talk to us about the rest of the agric market. Wheat futures are down. This has been a very interesting year for agric commodities. Some strongly up, others significantly lower. Impacts based on a number of issues from weather conditions, adverse weather conditions, crop disease in a few countries. Significantly, cocoa and sugar up very strongly the year, 14%. If I have put some money on cocoa this time around, I should be earning well.
Yes, you would be. Cocoa is one of the top performers of the in the commodities markets, cocoa and sugar. Cocoa, the reason being is, you know, West African countries producing cocoa, Ivory Coast and Ghana has shortfall in supply during this year. So this is what is pushing up cocoa prices. And then if you look at sugar as well, sugar prices are going up because traders are anticipating that the global supply, there's going to be a global supply shortfall, which is the first time in 6 years, because we've had 5 years of consistent surplus. And then now we're seeing that the El Nino pattern is definitely going to affect Brazil, and it's also going to affect India. But the thing is, when we're looking at sugar as well, the Indian government has come out to say, okay, you know what, we've seen that you've not been paying up your farmers, the debt you owe to farmers, that's the sugar millers. So we're going to subsidize your cost of production, but this is based on you exporting 80% more of what you have. And that's why you can see that the increase in sugar prices is marginal, because traders are also anticipating that India is going to push out more sugar into the market. So sugar prices in the near term are probably going to start coming down and might not be the top performer, and cocoa will take the lead in the agri-commodities market.
So where does Nigeria fit into this entire conversation? I know we do some cocoa. Sugar, we're not yet there.
No, we're not yet there for sugar. But we do cocoa. But if we're looking at Nigeria, then we'll probably be looking at the fast-moving consumer goods, how this is going to affect that industry. And obviously, if you're having an increase in the cost of production, this is going to affect your profit margins. So that's going to be the major effect on the Nigerian market, coming from the cost of this material.
So whatever happens to sugar, I'm not seeing anything trickling down to the shelf price when I go to the next store, to the store next door.
You probably will. I mean, for sugar prices at the moment, they've gone up significantly, but like I said, I'm expecting them to come down because of Indian government's decision to subsidize production, and this would push out more sugar into the market. So this would affect sugar prices in the long term, but in the near term, sugar prices are going up.
Okay, let's leave the agri-commodities for now. We'll keep you around in the studio. After the break, we'll get a lot more to talk about, especially from the other side of the divide, which is the usual of this conversation. You know that. Oil, isn't it?
Yes,
Good.
it is.
From agri, now let's talk about crude prices. It looks like the conversation will continue on prices as we see stronger dollar. U.S. interest rate decision is just about upper week. It is about the 15th. Then we're expecting the U.S. Job data on Thursday, expectations of 200,000 new jobs. If U.S. pipe very strong ahead, looking at the last GDP, it looks like U.S. will still remain #1, and the rift, the issue with oil, shale, whatever, will continue till the end of the year. Perhaps we'll come back in 2016 still having the same conversation.
Yes, that's likely to happen. Like you mentioned about the U.S. farm report. I mean, if this should happen, then we're looking at a situation where this makes a good case for them to increase interest rates. And obviously, there's a relationship between the interest rate and the strength of the dollar. So if the dollar is strengthening further, this is going to make oil more expensive, thereby decreasing the demand for oil despite the lower oil prices we're seeing. And so if we're having demand coming down and we're having supply still that high, then this is an indication that the energy market is still going to be on the low side into 2016. And what we've noticed is that since this has been the case for about 18 months now, this is from June last year to this year, December, we've seen this persistent decline in oil prices. The average for 2014 was about $97 to a barrel, and now we have it at $56 to a barrel. So this is just all this are pointing towards the fact that oil prices are probably still going to keep going down based on what is happening in the market.
Well, Fitch Ratings earlier today was talking about likely recovery in oil prices around middle of 2017. Is that an expectation?
Yeah, that's an expectation. I mean, most analysts are projecting that because of the decline in oil prices, most of the producers are going to have to come out of the market, and then we're going to have lower investments as well. I mean, if you look at the U.S., we've had a significant decline in their oil rigs, from about 60% decline from what it was this time last year. So what most analysts are predicting is that, okay, if we have this persistent decline in oil price, there will be a break-even point where high cost producing oil firms would not be able to support their production with the slow prices.
And in terms of what happens moving forward for Nigeria, so let's bring it home a little bit here. How do we fit into this ranking and position that we see there on the screen? Now, Nigeria is among those in the green in terms of output. So it hasn't been a bad year per se for Nigeria.
I mean, Nigeria is more on the middle ground. We're not so great, we're not so bad. I mean, you could see the impact on our FAC allocations because most of our revenue comes from oil anyways. You can see that from the high of about 755 billion last year, now we're currently at 400 and something billion this year. So, I mean, we're still seeing the impact of the lower oil prices in Nigeria, but it's definitely getting to us, but it's not as bad as a country like, say, Venezuela, for instance. But if it keeps going that direction, then Nigeria is going to have to...
Do you think we'll be able to keep our shirt when it comes to outputs? Do you think we'll be able to keep our position within this body?
Well, when it comes to output, I guess the only option for Nigeria now is to maintain output to help compensate for the lower oil prices. I mean, if you're having lower oil prices, the rationale for you to do, the right thing for you to do is to push up production to compensate for that lower oil prices. So I guess that's what Nigeria is going to have to do for a while until when we see a recovery in oil prices.